Dividend investors, bonjour, this is Mike Yahoo, founder of Dividend Stocks Rocks and passionate investor. Welcome to this dividend income report where I share all my secrets, all my portfolio, and tell you everything about what happened over the past month. So basically, quick recap, back in 2017, I quit my job to become founder of Dividend Stocks Rocks full-time. I used to be a private banker, so I received a big fat check from my pension plan. Decide to invest it all pretty much within 3 months, so between September and December 2017, against pretty much everybody. Most people were saying, you know what, market is at all-time high, you should wait, that's completely ridiculous, valuation don't make sense, yada yada. So whatever, I trust my strategy, I invest with conviction, and I've built a dividend growth portfolio. The key point here is I cannot put more money into this account, so it makes it a perfect case study to show you the power of dividend growth investing, whether the market is doing well or the market is doing bad. And actually, this is pretty much what's happening this year. It's a great example. So let's look at this first graph where you can see the S&P 500 and the TSX, so both US Canadian market, and you see what happened over the past 3 years. We just came back from another V recovery this month. Kind of crazy because a lot of people were thinking this is the end of the world, this is the Great Depression, the capitalist market is going to crumble, governments are printing money like there's no tomorrow, so we'll have to go to bitcoins or gold to save our souls or something like that, right? But right now it's kind of weird because we're having a V recovery. And I'm not saying I didn't expect that, to be honest. I thought that we would have a lot more volatility, but that was just what happened. So you see, we had the same thing in 2018 to 2019, which was exactly a perfect V, which is pretty rare. Right now here, we're pretty much over there, but not quite there yet, depending on your portfolio. I'm personally positive since the beginning of the year, but not from my peak level. So for me, it's not a perfect V so far, but then it's pretty much good news for most investors. If you look at the past, actually, it didn't happen. When you look at the tech bubble, it took a longer term. We're talking about 5-6 years for the tech bubble to recover. And then the financial crisis, same thing here. We're talking about like 4 years roughly to fully recover from the drop. So being able to, even if you don't recover fully, but you just like 3, 4, 5% short of a full recovery within a couple of months, that is just insane. And then a lot of people have something to say about it. And this is where you're trying to avoid that trap, but I know that most of you will still fall into it. And this is why I'm recording this video, is to advise you not to start looking for advice. Everybody has their opinion on that, and then you'll have plenty of people on Seeking Alpha, on Twitter, on blogs, on the newspaper. They're going to tell you all kind of things. They're going to tell you that the market is going to crash or it's going to go up forever because the Fed is printing money, and actually both sides were going to use the same argument but from a different angle perspective. But the point here is, if you're trying to make like sounds out of it, if you're trying to make something that doesn't make sense and now you're trying to put that into your investing strategy and you're trying to time the market, this is where you're going to get burned. And even worse is you're going to read all that information and then you're going to suffer from being paralyzed by analysis. So we talk often about paralysis by analysis. This means overload of information, so contradictory opinions, and then you're left with nothing but the good old, oh, I will just wait to see how it's going to happen in the next couple of months and see how it feels, right? And this is a big problem. Now I have to share a discussion with one of my friends that I had. He's working in financial industry as well, and then we were just talking about the fact that, you know, the market is crazy, there's like so much information, and the important part here is right there. He told me, like, you know what, we don't know what's happening, we only know a portion of what's happening, and our brain cannot factor everything. Nobody knows the impact of what's going to happen because of that pandemic and how much debt we get and how much money we print. We don't know that impact because that never happened before, and therefore there is no point to trying to figure it out. If you stick to your strategy, you're going to reduce your stress, you're going to improve your portfolio performance, and you're going to sleep better at night. So why don't you just do that? Now, I want to talk about something that is quite interesting. It's a different way to build cash. You know, I'm 100% invested since I started investing back in 2003. So it means it's been 17 years that the maximum of cash I had in my portfolio was probably like 5%. And even 5% I find pretty high. I usually try to keep it around like 2-3% maximum, and this is usually because I receive dividend and then I just didn't invest it for a few months until I built us enough cash or I found an interesting opportunity. So the way I build cash, because a lot of people were telling me, well, Mike, when the market crashes like this, you have no dry powder, you cannot invest in the market, you cannot capture those opportunities. So aren't you feeling that you're missing something? Well, I am not, because what I do is I keep my winners. And at one point, what happened is my winners are doing so well that I have to sell some shares. And this is exactly what happened with Apple recently. First, I sold some shares of Apple and bought VFC Corporation that have been detailed in a previous YouTube video a couple of months ago. That was back in March, actually. And then most recently, I also had to share some shares of Apple to buy Brookfield Property. Then again, I've detailed that in another YouTube channel. So if you didn't get the hint right now, you better subscribe to the channel to get all my videos. I'm going to put the reference for the two videos in the comment section, but still, I'm posting like 2-3 videos every week now, pretty casual, pretty straightforward. And my goal here is to help you to invest with more conviction so you can enjoy your retirement. So if you like that, smash the like button and subscribe to my video channels. Now, moving on to, well, that trade, I've already explained that to you, selling lows, buying Brookfield Property. I sold also Apple to do that, so I'm not going to go back on this. You can look at my video. What I want to show you now is my portfolio, actually. So there you go. That's the Canadian part. I'm plus 7%. Numbers are as of June 4th, so actually numbers are pretty better this morning. But regardless, it will still a very good month, 7% in like almost 5 weeks. It's phenomenal. What explained that is actually banks. I have National Bank and Royal Banks. They declared their earnings back in May. It was better than expected, so they went up double digit. I also have Alimentation Couche-Tard and Magna International, both went up by double digit. What is happening right now on the market is the feeling is there won't be a second wave, or if there's a second wave, what's going to happen is going to be less important in terms of economic impact. And then again, I'm not talking about disease, I'm not talking about death. What I'm talking about is the market sees a potential second wave will not generate another economic lockdown. If it's the case, well, then we've seen some volatility in the past few days. If it's the case and we have a second wave and then we have to lock down the economy again and go in quarantine, well, this is what's going to happen. We're going to see the market going back down very, very fast. But in the meantime, if you're waiting for that, you're just waiting for bad news that nobody knows if it's coming or not. I don't see that as an investing strategy. It's up to you guys, but personally, I'd rather stay invested and make sure that I'm on the positive side of things. Now, moving on to my US portfolio. What you have here is I'm up 9%, and obviously the US portfolio had an amazing run. I had several of my picks here that went very, very well, but the reason why I lagged a bit behind the market went up by 10%, I went up by 9%, is because Microsoft only went up by 6% something. It's only normal. Microsoft has been one of my portfolio protector against volatility this year, along with Apple. Those are two strong performers, but they're not always following the market. There was such a hype around Microsoft since the beginning of the year. It's only normal that this one didn't rebound that much because it was not down as well. So that explains why I'm slightly behind for the US market, and on the Canadian side, I beat the market for about 1.5%. Doesn't really matter from month to month, honestly, because you can beat and lag behind like 1 month after the other. My purpose, my goal is to beat the market over the long run. So I rather look at the past 3 years. It will be almost 3 years now. In September 2020, it will be 3 years I have this portfolio, and this will tell me a lot more because I will go through the 2018 crashes, and I'll be right in the middle of a pandemic and another crash. So it's going to tell me a lot about my strategy. So far, so good. I'm doing very well, but yet we still have the entire summer to come. So I'm not going to sell the bear right away. I'm going to wait until September to tell you my results over the past 3 years. Last graph I want to show you, actually 2 graphs, is dividend payments. Obviously, this one I made $363 in dividend back in May. This was redeposited on the account, and then I used that money to make more trades. It's 5.4% higher than last year for the same month. Keep in mind, I'm not adding cash, so this means that only companies that has increased their dividend. You can see the detail here. National Bank, Royal Bank doing very well. Apple here, it's not a dividend cut, it's because I sold some shares, remember, to buy VF Corporation, so this is why the dividend payment is lower. Hasbro, big red flag here. We already know that the company went through some troubles, but they didn't increase their dividend. And it's been, I think, like 5 or 6 quarters in a row that they're at the same level. So now it's a red flag. I'll have to carefully track this one and see what's happening. I'm not too happy about it. And I want to make sure that my investment, all my holdings increase their payments. So I'm gonna keep this one very on the top of my desk to make sure everything is going well. Same with Lazard. Lazard actually pays special dividend and regular dividend. So the regular dividend was okay, and actually slightly better. You have an increase compared to last year, but the special dividend decreased. And that's the thing about special dividend. Sometimes they're high, sometimes they're low. You cannot build your income stream from special dividends, but at least it's fun to receive it from time to time, right? But overall, quite satisfied, especially in a month where we're in the middle of pandemic. I'm still showing higher dividend payment than last year, and what you see here is the cumulative dividend payments I've received since I started this portfolio. So obviously I didn't receive anything in October 2017, started to receive my first dividend payment in November, and then all the way up right there. So I'm getting close to $9,000 in total. I'll definitely hit that mark for 3 years. So that makes an average of $3,000 per year. This is obviously increasing. Keep in mind, I invested $108,000 at the beginning of September 2017. Portfolio value today is over 150, so it's pretty good. I was helped by dividend growth stocks, and I was also helped by the currency factor, which is roughly maybe 5-6% higher than when I started investing, but these things fluctuate up and downs all the time, so it's not really something that I consider too much. I'm rather focused on having strong businesses in my portfolio to make sure that they grow and they thrive during those difficult times. I'd like to know how you did last month, how things went well for you. Are you recovering? Are you a little bit short, or maybe you're in advance? So tell me in the comment section how you've been with your portfolio in this crazy year. I think that while we are sharing experience, while we're sharing results, it will encourage us to keep going, stay invested, and make sure that we stick on our strategy. So until next video, stay invested. Cheers.